All right, everybody, it is 6:01, so this will be your formal welcome. My name is Jason Slade. I'm actually the one who invited everybody and put this out on to the Zoom client and got this invite for you. I just want to go over some housekeeping things. This is a recorded video, and so this will be put on our website in probably 24 hours. I actually have to get the files from Zoom, then I can post them. So please allow like 24 hours, and then we'll have it on our website. Lastly, before I hand it off, if you jiggle your mouse, look at the bottom of your screen, you're going to have a rail. And in that rail, you can open up your Q&A, and that is the way that you ask any questions. If there's something that you want to comment on or a question, or maybe you want to have a little bit more details about a certain topic that's going on in the presentation, please use that. We do have people that are going to be standing by, that are going to be answering those questions. That way we can get you the answers to your questions in real time. And the best way is through that Q&A. Other than that, welcome everybody, and Brendan, go ahead.
Hello, everyone, and welcome to the 2024 Montana Department of Revenue Property Tax Town Hall Series. In keeping with our agency's mission of providing the best citizen service possible, we've gone forward the past couple of years and tried to get out to the taxpayers to show them how Montana's property tax system works, from the appraisal through the local budgeting process. Last year, we went through the appraisals, tried to show everyone how to read their property assessment notices and how the appraisal system worked. This year, we've taken another step, and we've actually partnered with the Montana Association of Counties, and we are presenting to the taxpayers this year a symposium based on how property taxes work and how the budgeting process and where your money goes. So tonight, we have a couple of presenters who are very well versed in this, Katie Kakalexic and Eric Dale, both of the Department of Revenue. They'll be here to present and set out for you, hopefully, a very informative step-by-step explanation of how Montana's property tax system works and how your property tax bill is arrived at. I want to thank the Montana Association of Counties and my boss, Governor Greg Gianforte, for facilitating this and getting it going. With that, I would like Jason to turn on the formal welcome for the governor. We appreciate your attendance. We look forward to hearing from your questions. And as always, if there's any reason that you would like to speak with any of us, please contact my agency. We're here to help. Thank you.
Hi, Governor Greg Gianforte here. I want to thank you for attending a property tax town hall hosted by the Department of Revenue. I hear it all the time, and I agree. Property taxes are too high. Because Montana homeowners deserve immediate relief, we worked with the legislature to deliver the largest property tax rebate in state history. This year, eligible Montana homeowners can claim up to $675 between now and October 1st. You can claim yours today at getmyrebate.mt.gov. While property tax rebates are a temporary solution, Montanans deserve permanent relief. That's why I launched a bipartisan property tax task force to reform our system. I strongly support its recommendation to create a homestead exemption to provide Montana resident homeowners with long-term relief and ensure out-of-staters who don't live here, don't pay income taxes here, and own second homes here pay their fair share to fund our schools, law enforcement, and roads. Property taxes are a complicated issue, and it can be difficult to understand. I'm grateful to the Department of Revenue and Director Beatty for working with our local partners to help explain how the property tax system works. Thank you for attending this town hall. I hope you leave with a better understanding of our property tax system, and we gain better insight into your thoughts and beliefs. Serving as your governor is the greatest honor of my life. Please know my door is always open. Hi.
All right, and I think next it's going to be Katie. You're on mute, Katie.
Sorry about that.
Perfect.
Like Brendan said, my name is Katie Kakalisic, and I'm located in the Great Falls Field Office. The agenda for tonight is just some basic introductions with Director Beatty took care of. I'm going to go over some property tax basics, and then I'll turn that over to Eric Dale, who will go over state and county tax base and distribution and go over some hypothetical tax illustrations. And then we'll circle back to the rebate that Governor Gianforte was talking about, and then the Q&As at the end. Here are some of the ground rules for tonight. Listen with an open mind, no interruptions, be kind and respectful. The Q&A is at the end. Please talk one at a time, which I don't believe we're able to talk in this, but you can type your questions out and somebody will be able to answer. And that's about all we have for this one. So property tax basics. Property taxes are an ad valorem tax. That means your taxes. Let me start over on that. Property taxes are an ad valorem tax. Taxes are levied in proportion to your property value. There are three primary players involved in the property tax system: the legislature, which determines the tax classes, applicable tax rates, and any abatements or exemptions. The Department of Revenue classifies property and determines the assessed value, and the local taxing jurisdictions determine mill rates, special fees, and changes. So the formula below is assessed value, which is determined by the Department of Revenue, times the tax rate set by legislation equals your taxable value. You then take your taxable value times your mill levy, which is determined by your taxing jurisdiction, and that gives you your general property tax. Montana legislature establishes classes of property and sets the applicable tax rate that applies to each class. Currently, there are 16 property classes. The tax rates range from 0.29% to 15.12%. This information is also on your appraisal and classification notice. It determines how your properties are classified, such as a city or town lot or commercial tract land. Tax rates may be adjusted for certain tax benefits. Sorry, Jason, I'm still back on the never mind. Tax rates may be adjusted for certain tax benefits, exemptions, tax abatements, or property tax programs. If you'd like to see a complete list of our tax rates, you can view them on mtrevenue.gov. Montana Department of Revenue and the Property Assessment Division classifies and values property at 100% of market value. We then determine the taxable value. So your market value times your tax rate equals your taxable value. The department then certifies your taxable value by the first Monday in August to all local taxing jurisdictions. The state receives and redistributes all the portions of the property taxes it collects back to local schools and the university systems. So the Department of Revenue values all property, residential, commercial, and industrial property as it stands 1/1 of the current tax year. So if you have any new construction, destruction, or any land splits, that is all determined based on January 1st of the tax year. If you start a new construction project in March, it will not go on until the following tax year. Same thing if you are filing a survey or a plat to split or combine your land. If that is filed after January, it will not go on until the following tax year. All property in Montana was valued as of January 1st, 2022 for the 2023-2024 valuation cycles, except for forest land. However, going forward, starting in our 2025 reappraisal year, forest land will be on a 2-year cycle. During this time, the property ownerships on all properties are updated up until we turn over the tax rolls to the treasurer's office for tax billing. So properties are valued through mass appraisal, which is a systematic appraisal of groups of property as a given date using standardized procedures and statistical testing. When our appraisers are going out into the field and collecting this data, We're using sales, income and expense reports, construction costs to help develop these statistical models to help mass appraise properties. Department of Revenue staff are always available outside of these meetings as well to come into our office if you have questions at any time. Article 8, Section 3 of the Montana Constitution states that we shall appraise, assess, and equalize the valuation of all property which is to be taxed in a manner provided by law. Montana law requires the Department of Revenue to value property at 100% of market value. It also requires that we inspect properties and verify characteristics to achieve the most accurate information to equalize these values amongst properties. Department of Revenue staff are authorized by Montana Law 15-7-139 to access private property to appraise and audit for valuation purposes. So you may be out and about, see an appraiser at your property. They will always knock at your door, introduce themselves, and let you know why they're there. They also can carry a state of Montana badge to be able to identify themselves. And an appraiser will never go inside your property or your building without being invited. Once the appraisers collect all this information, we generate an assessment notice, which comes out every 2 years on the even tax or on the odd tax years. So once you receive your appraisal and classification notice, that opens your appeal rights for 30 days from the date on that appeal notice. So if you disagree with the value of your property or any sort of classification on that appraisal notice, you can file what's called an informal classification and appraisal review, also known as an AB 26. Once you file this, a Department of Revenue staff will be contacting each person individually to set up a time to come out and view your property to make sure that all the characteristics are correct. The Department of Revenue tries very hard to solve all these disputes at our local level, and we have about a 90% success rate at that. However, if you are still unhappy with the value on your property, you have other avenues such as the County Tax Appeal Board or the State Tax Appeal Board. The Department of Revenue also offers different property tax assistance programs. We have the Property Tax Assistance Program, which is income-based if it's your primary residence. We have the Montana Disabled Veterans Program for residential property owners if they are rated or paid at 100% disabled and fall within the income brackets. The Land Value Property Tax Assistance Program, which has to do if there's a disproportionate amount of value attributed to your land as opposed to your structures. And then the Elderly Homeowner Renter Tax Credit that can be filed with your income tax. A full list of these programs as well as the forms are available online at mtrevenue.gov.
All right, I think I'll take over from here. So as Katie mentioned, the Department of Revenue plays an important role in determining your property taxes. But in addition to the Department of Revenue valuing your property, the local governments also play a very important role in your ultimate tax liability. So the Montana Department of Revenue annually provides taxing jurisdictions with a total taxable value of all the property located in that taxing jurisdiction, and they certify that value in the first Monday in August. Property taxes are a little bit different than traditional taxes you might think of, such as income taxes, for example, whereas income taxes generate more money the more income is out there. Just because the value of property goes up doesn't necessarily mean the tax liability will also go up. There are more pieces at play in the ultimate formula. One of the big reasons that property tax differs than other types of taxes is the local taxing jurisdictions will use the tax base that is certified by the department, and then they will determine what the taxes levied will be by determining the number of mills they can levy. So essentially it's budget driven, and they determine how much their budgetary needs are first, and then determine how much taxes will be levied, as opposed to the other way around. Now, just because they predetermine the amount of tax revenue they will generate doesn't mean they can levy as much tax revenue as their heart's desire. These amounts that they're allowed to levy are generally prohibited and restricted under separate formulas in state law. These formulas differ. Cities and counties are restricted by specific provisions of 1510-420 MCA that we'll talk about in this moment. Schools are limited by a complicated formula in state law that is essentially based on the number of students enrolled in those schools, which is also controlled by the legislature, or the formula is controlled, not the number of students, but in any event. And then in addition to the schools and city county governments, the state also levies several sets of mills. These are the 95 school equalization mills, which are indeed subject to 1510-420 as well. These revenues are ultimately redistributed to help equalize the burden of school funding throughout the state. There's also the 6 university mills that are used to help fund higher education in the Montana university system. And then there is the 1.5 mills in locations or counties with technical or vocational schools. Those include Silver Bow County, Cascade, Yellowstone, Missoula, Lewis and Clark, and those are the 5 counties, if memory serves. So as we mentioned, cities and counties can't simply levy as many dollars as they would like. They are limited by the legislature in section 1510-420 of the Montana Code annotated. This particular section of code limits the amount they can increase their budget. Specifically, they are allowed to increase their budget by half the rate of the average 3 years of inflation, or excuse me, half the rate of the prior 3 years of inflation. And then they're also allowed to increase their budgeted amounts by newly taxable values. Essentially, as new property comes on the tax rolls, the local governments are allowed to increase their revenue to pay for the increased demand in government services that those new properties would generate. If a taxing jurisdiction doesn't levy the maximum amount under 1510-420, the amount that they are foregoing can be carried forward into subsequent years. In this way, taxing jurisdictions aren't simply levying the maximum amount every year and get into a use or lose it situation. As I mentioned before, the calculations are done without adding the newly taxable values. So they determine how much their maximum mills can be, excluding the newly taxable amounts from the base, and then they levy on all property in the taxing jurisdiction, including the newly taxable amount. And as I said, that is a way for governments to grow their budgets. In addition to the provisions of 1510-420, not all the levies that are on a tax bill may be subject to 1510-420. Specific exemptions include permissive medical levies, sheriff's retirement judgment levies, and then the other big one is voted levies. So if the electorate determines they would like the government to provide additional services, the government is allowed to generate the revenue to pay for those services. Lastly, I just wanted to talk quickly about special assessments and fees. These can or cannot, may or may not be, I should say, ad valorem taxes. They're established by local governments to pay for services specific to an area or service type. One of the requirements for these assessments and fees is that the property owner receive a benefit from the assessment or fee. It also requires notification to each property owner and the creation or change of an assessment charge, of an assessment or fee, and some public hearing requirements. Some examples of these types of assessments and fees include solid waste districts, rural improvement districts, or lighting districts. Next, we want to talk about what the actual situation is across the state. So the first set of tables or excuse me, the tables on the left-hand side of the screen show where the taxes are ultimately coming from. So as you can see, residential property pays 57% of all property taxes throughout the state. This percentage has been growing as residential property has been appreciating faster than other types of property throughout the state. And this was especially true in this last reappraisal cycle. The other thing to notice really quickly about the figures in this table are that although residential property pays 57% of the total taxes, if you look at the market value on there, the residential property makes up 75% of the total market value. And the reason for that discrepancy is partially a function of the fact that the tax rate that we talked about earlier is 1.35 for residential property, which is a bit lower than other types of property in the state. So they benefit from that. And as a result, they have a smaller share of total taxes paid than their market value would suggest. The numbers on the right side of the screen represent where that money goes. And as you can see, the taxes in both tables are the same. So if you look at where the money's coming from, $2.342 billion is being generated. And that is also the number on the right-hand side of the screen, so we can see where that money is distributed. If you look at the pie graph on the right-hand side of the screen, you can see that 20% goes to state equalization funds and the Montana University system. Again, those are the 95 mills, the 1.5 mills, and the 6 mills used to fund the Montana University system. County governments comprise 27% of total taxes levied. So 27% of all taxes levied in the state go to help fund county governments and all the things that they do. Local schools receive 30.3% of all taxes levied. So that includes local elementary schools, local high school districts, and local K-12 districts where those exist. Countywide schools make up 6.5%. So that includes things like countywide transportation, countywide retirement, and things of that nature. The cities and towns receive 11.3% of total tax revenue. So if you live in an incorporated city or town, that's where that money will go. And then fire and miscellaneous districts make up 4.6% of the total. If we combine the school equalization, the local school taxes, and the countywide education taxes, we can see that 57.2% of all taxes raised in the property tax system ultimately go to fund education in one form or another. And then the remaining 42.9% is used to help fund county, city, and other local government services. These are statewide totals, so they can vary depending on the jurisdiction that you happen to be in. So as an example, here are those same values for the Butte-Silverbow area. If you see, again, the numbers on the total taxes on the two tables match. 64.9 million is both how much revenue was generated and how much revenue was distributed. If we go through the tax-based distribution, we see that residential property makes up slightly less than the statewide average at only 46.2%. A big reason for that, if you look down on the pie chart, the purple slice of the pie, that 9.8% is the proceeds amount. That is property that is owned, or excuse me, it is gross and net proceeds of mines throughout the state. So if you're familiar with the Butte-Silverbow area, the mine that is located there, the copper mine mainly pays a larger share of property taxes than the statewide average. And so that means that the residential pays slightly less. If we look at the distribution of taxes, we can see that the county government is slightly larger than the statewide average at 41.7%. And that makes sense if you're familiar with the area, as Butte-Silverbow is an incorporated city and county. So if we go down to their city and town amount, it is 0.1% of the total taxes raised in that area. And it's not zero because of the incorporated community of Walkerville, but it is substantially less than you would see in other areas across the state. So those were the statewide numbers, and then a couple examples. As I mentioned, those numbers can vary substantially depending on the area where you live. So in Madison County, for example, they're much more dominated by residential property. So 86% of their total tax base is made up of residential property. Similarly, these other 3 counties are at the top of that spectrum, if you will. So again, Lake County also is comprised of 86% residential property, Ravalli County is 79, and Lincoln County is 77% residential property. At the other end of the spectrum, we see that there are some areas across the state that have a very small portion of their tax base comprised of residential property. So for example, in Carter County, only 2% of their overall tax base is made up of residential property. In Webo, that number is 3%, Fallon is 7%, Rosebud is 8%, and Wheatland is 13%. So they have other types of property that are picking up a large share of the overall tax burden. So here are the tax bases for 2 of those extreme examples. On the left-hand side, we see that the other category makes up 94.3% of the total tax base. That is primarily centrally assessed properties. In the specific case of Carter County, that's going to be your oil pipelines. A couple things about oil pipelines. They are centrally assessed, as I mentioned earlier, which means they are unitarily valued. So they take the value of the entire company and then they allocate it to the different taxing jurisdictions across the state. And then in addition to that, the tax rate on oil pipelines is considerably higher than that of residential. I believe it's around 12%. So it doesn't take as much market value to have a substantial impact on the taxable value and ultimately the tax distribution for that area. In addition, Carter County is a relatively small county as far as population and government services go, and therefore they don't need as much, and those centrally assessed companies can have an even larger impact. Contrast that with the Madison County values on the right hand side. If you're familiar with Madison County, you will be aware that the Yellowstone Club is technically in Madison County, and that is where there are several high value homes, and they make up a disproportionate share of the tax base relative to other communities. Next, we'll look at where those monies go. So here we have the distribution of those tax dollars for Carter and Madison County. The one thing that I noticed in looking at this data is that if we look at the state equalization and university tax revenue, it represents a larger share of these tax distributions than the state as a whole. And a big reason for that is because of those other types of properties are sharing a larger portion of the burden, and so the overall mills in these areas tend to be less. However, for the state mills, they are fixed statewide at 95 and 6 mills, and so their share of the overall distribution in these particular areas can be quite a bit larger than in some other parts of the state. Now that we've gone over some statistics and kind of the broad overview of how the system works, we thought it would be a good time to go over some hypothetical examples. So next we're going to go through some examples that were based on the Montana Free Press article, Property Taxes Explained with Pictures, published by Eric Dietrich. It had some good examples that are worth discussing, and we're going to do so here. Ultimately, these examples will hopefully illustrate that there are 2 fundamental ways in which your property taxes can change or more likely increase. The first way that the tax liability can increase is because taxing jurisdictions ultimately levy more revenue. They can do this because of inflationary pressures. The cost of goods and services increase, so the cost of government to provide those goods and services also increases. They can also increase due to community growth, and that's where some of that newly taxable conversation I talked about earlier can come into play. If a community is growing, then the demands on those government goods and services, or for those government goods and services, will also grow. And then another way they can go is if the electorate votes additional mill levies and requires the government to provide additional goods and services. In contrast, the other way that your property taxes might increase, or reason it might increase, is because your share of the overall tax base increases. So that could happen if your property appreciates more rapidly than all the other properties in that taxing jurisdiction. Similarly, if all the property decreases in your area, but perhaps your property decreases by slightly less, then your share of the overall tax base would also grow, which would increase your ultimate tax liability. So here, if we think of a hypothetical taxing jurisdiction with 5 properties, one large industrial factory worth $1 million, a office building worth $750,000, 2 smaller residential houses, each worth $300,000, and a large home worth $600,000 is our tax base. So we take those market values that are determined by the Department of Revenue and we multiply them by the statutory tax rates. For the factory and the office building, those tax rates are 1.89%, and for the residential properties, it's 1.35%. So if we take the next line down, we can see the taxable values for those 5 properties. And in total, that means that the total tax base for this taxing jurisdiction is $49,275. But the more important thing than any of the individual taxable values for any particular property is what those taxables values represent relative to the overall tax base. So for example, the factory represents 38% of the tax base. The office building represents 29% of the tax base. Each of the small residential homes represents 8% of the tax base, and the large home represents 16% of the total tax base. So if we think about that hypothetical taxing jurisdiction again, and we assume that their total budgetary needs are $40,000, then that $40,000 budgetary need is distributed proportionally among those 5 properties. So again, that factory represents 38% of the overall tax base, and so they will ultimately pay 38% of the $40,000 budget, or in this case, $15,342. Similarly, office building has a taxable value of $14,175, which represents 29% of the tax base, and so their tax liability is $11,507. The 2 small houses have a tax liability of $3,288, which represents 8% of that overall budget, and the large property has a 16% share of the overall tax burden. Combined, the commercial properties represent 67% of the overall tax base, where the residential properties represent 33% of the tax base. If you think back to the statewide averages, in total, the residential properties made up 57% on a statewide basis of the total tax base, but slightly lower in this particular example. So next we'll look at what happens if the taxing jurisdiction chooses to levy additional revenue. So in this case, we're going to assume that that taxing jurisdiction chooses to levy an additional 5% or an additional $2,000. And that could be for a variety of reasons, either inflation, voted mills, things of that nature. So that $2,000 that is new will be shared proportionally to the existing tax base because the taxable values haven't fundamentally changed. So as we can see, the total taxes levied went up by 5%, and each individual property's taxes also went up by 5%. Again, the commercial properties make up 67% of the overall tax base, and the residential properties make up 33% of the tax base. So those numbers haven't changed from the prior slide. Next, we'll look at a case where maybe the budgetary needs of the taxing jurisdiction don't necessarily change, but perhaps the values do. So in this case, we're going to assume that this would be similar to a reappraisal cycle. And in this particular example, the values of all the residential property doubled, whereas the commercial properties increased by 20%. So now the factory represents 31% of the overall tax base. The office building represents 24%, which is a decrease from what it was in the base scenario. The residential properties saw their share of the overall tax burden grow. Each of the residential properties previously made up 8% of the tax base, and now their share is 11%, whereas the large home now makes up 22% of the overall tax base. It's also worth noting that the factory and the large home in this particular example have the same market value, but because the rate of the commercial property is 1.89 and it's only 1.35 for the residential house, the taxable values are not equal. In fact, the commercial property has a slightly larger taxable value. This is also an interesting example of how both the commercial properties saw an increase in their overall value, and yet their taxes went down because their share of the overall tax base decreased by 18% for each of those commercial properties. Combined, the commercial properties now make up 55% of the overall tax base, whereas the residential properties now make up 45% of the tax base. The last scenario we wanted to look at is what happens if those two things happen at the same time, which is more similar to what we see in the real world. So in this example, the values changed. Again, the price of the residential properties doubled and the commercial properties increased by 20%. And then in addition, the taxing jurisdiction also increased their overall budget by 5% or $2,000 in this example. So here we see the commercial properties saw a decrease. It wasn't as large of a decrease as the prior slide that saw an 18% decrease, but it was an overall decrease. And then the residential properties saw an even larger increase because they were hit with the increase in the overall budget, and their share of the overall tax base also increased. So these examples are sort of meant to illustrate the three roles as well. So the Department of Revenue ultimately determines the market values of all of these properties and all properties across the state. The legislature determines what those tax rates are for each type of property, and then the local taxing jurisdictions develop budgets and determine the ultimate taxes to be levied and the mills to be levied on those properties.
So as Governor Gianforte said during his welcome video, right now there is the Montana Property Tax Rebate Program going on. If you own your Montana residence for the last, or for at least 7 months in 2023, lived in that residence for 7 months in 2023, and been billed and paid the property taxes on that residence, you can qualify for up to $675 back for a rebate. If you would like help with any of these, you can come to our local offices, or you can apply online at getmyrebate.mt.gov. Here is a map of the state and how it's broken up into our 4 regions. The diamonds on the map in red show where our local field offices are located, along with the phone numbers for each area. Here again are our ground rules for the presentation and any questions that need to be asked or answered. Also, if you are in attendance, we would really appreciate any of your feedback. We want to keep doing these town hall presentations, and without your feedback, it's hard to make them better and better each year. If you could scan the QR code and give us some feedback, that would be great.
I think that concludes our presentation. We have been watching the question and answer, and we haven't had any. Does anybody have any questions for us? We do have our panelists stepping by. And we sure like to answer any questions and help you get you to your answers that you're looking for. All right, well, heck, it looks like everybody wants to have an early night. We want to thank everybody. Thank you, Director Beatty, for coming on and welcoming all of us. Thank you, Gianforte, Governor Gianforte, for playing the video, our welcome video. Eric Dale, thank you so much for presenting, and Katie Kopchik, please, thank you so much for coming on and doing all this. Bryce, thanks for being the backup. Other than that, I guess we'll put a fork in it. I would like to tell everybody it should take us about 24 hours to get this online. So I have to get the files, and then I'll put it, and it will be on our website. So we will have that in 24 hours. Thank you so much. Everybody have a nice evening.